Welcome everyone to tonight's meeting of the New York Technology Council. Delighted to have you all here. I want to thank our annual sponsors. We've now grown to 2 pages, and we thank them all. I'm not going to read the names. Their logos are in the programs that you've got. I want to thank Anchin, our host. This is a great space. It's a great space to network outside, and it's a great room to have an event in. So on to the event tonight. Now, in order to get plenty of time for content, I'm not going to read the bios of the speakers. You've got them all. And we're going to go right into it. Justin O'Horo is going to be our moderator tonight, and I'm going to let him let the speakers say a few words about themselves. So, Justin, thank you.
Sure.
Welcome.
Thank you, Eric, and thank you everybody for coming and for staying. The typo in the program, I'm glad that it wasn't discouraging and nobody got up and left, so we're all here for the right reason. Just to kick things off, again, Eric said you read everybody's bio, but I do want to give everybody the opportunity to say a few words, introduce themselves in their words. So Lou, if it's okay, I'll start down on the end.
Sure. I'm Lou Pizzileo, a partner at Grassi and Company. I cut my teeth working with startups in the mid-late 90s at Anderson, working with companies like Urban Fetch, and I don't know if anybody in this room remembers some of those, but in those days you could raise money with a ham sandwich. You didn't have to do much. The capital markets were flush, and raising money was pretty easy. Lots of companies went public. Accounting firms and law firms did quite well during that time with all that activity. After Anderson collapsed, I went to be a regulator for a few years, came back to public accounting, and still had the software technology startup bug, and in 09-10 started a tech practice at a different firm, and sort of cut my teeth a second time working with companies like Foursquare and Etsy and Kickstarter and some of sort of the New York startup royalty, as I refer to it. Learned a ton. The firm outgrew me. It became much like a Big Four was, and I decided to lift up that practice and take it to Grassi, which I've been at for 2 years, and the activity is sort of bubbling up again. And we recently onboarded about 5 or 6 startups that are exciting, both in New York and on the West Coast. So that's me in a nutshell.
Hi, I'm Vanessa Pestritto. I run New York Angels. It's one of the top angel groups in the world. We have over 120 members, and we invest in seed stage companies. I've been there for 3 years. I've helped grow the business. Membership by over 50%, and investments have increased by over 230%. We have an active role in the community with universities, incubators, accelerators, VC funds, other angel groups, and part of how we stay so active is that we have the members engaged throughout the community and the ecosystem. Prior to that, I was in technology consulting as a business lead, and I've worked with smaller companies growing their organizations using different forms of technology infrastructure.
I'm Nathalie, Molina, Niño. I was one of the ham sandwiches. Yeah. In '96, I started my very first .com out of Boulder, Colorado. I started a few more within and without larger organizations after that. Started angel investing rather early, and then took a break. Decided to leave tech and leave startups about 4 years ago. Started a foundation in partnership with Barnard College at Columbia University to support women-led startups and women entrepreneurs. And then most recently, not up to date in my bio, is I joined as Chief Revenue Officer for Power to Fly, which is a platform connecting amazing companies with wonderful professionals all over the world, all of whom happen to be women.
I'm Juetten, and I'm here, thank you for inviting me. I'm here from Arizona. I belong to the Arizona Technology Council, but I started a company that does a lot of business here in New York. And we raised $435,000 in angel funding last year. None of it in Arizona, all of it, but a little bit here in New York. My background is I'm a recovering accountant, and I also have a law degree, so I have the whole thing covered, not a practicing attorney. When I went back to law school, I saw that there's a huge gap between what people knew about starting a business and what they got excited about and what they forgot about. And what they forgot about was intellectual property, boring things like co-founder agreements, employee agreements, and everything. So designed some software based on my accounting backgrounds, like a TurboTax for identifying legal matters, and we've expanded that to be really just business matters. So that is what I've been in fundraising for, and it takes way more than a ham sandwich, that's for sure these days. So I'm excited to be here to share some of the huge mistakes that I made, mainly in Arizona. So thank you for having me.
It's one of those huge mistakes leaving a county. No. So Justin, I know. I had my attempt at humor. I used myself. But no, so Justin O'Hara, thank you for having me here. Thank you for letting me moderate. Partner with WithumSmith & Brown. We're a large public accounting firm. Tri-state area based, office a few blocks north of here, 550 people, and I focus specifically in our technology services group. So see it all from startups to more developed companies realizing their exit. Kind of grew up doing all the compliance stuff that all the CPAs do, but what I really love is the advisory stuff, transactional stuff. So that's kind of what my passion is. That's why I love this space. So we'll jump into it. From a housekeeping perspective, I think we're going to try and keep the program as conversational as possible. I know everybody says that, but I'm hoping we can actually do it. A few of you already told me some questions you had on your mind. I'll do my best to remember them, but if not, just throw up a hand. If I'm not calling on you, yell at me. Try and keep it to about 30-40 minutes. We can certainly go over. We can certainly let conversations spill out, but I'm going to do my best to keep on task. And with that, we'll jump into it. The first question, on my mind at least, is to discuss some early mistakes that people have made that maybe the group could benefit from. And I'm going to kick this one to Mary first, because I know she's semi-fresh off a red eye, and we need to keep her engaged. Sorry.
Okay, so one of the biggest mistakes that I made was thinking, okay, I'm going to pitch in Arizona, so I'm going to go down and pitch for the Desert Angels, which is a very large, one of the largest angel groups in the country, except they focus on biomedical. And when I looked out over the sea of people that I was pitching to when I made it there, there wasn't one other female in the room that wasn't there for some other reason. So find your crowd. That was the biggest mistake that I made. They were nice people, but they didn't understand software as a service, and they didn't understand kind of the whole, I'm a female entrepreneur, so I'm not going to be the same as a male entrepreneur in a lot of ways. So I ended up raising a lot of our money through Astia Angels here in New York, which is a great, if you are female or have a female in a lead role in your company, it's a great resource. So it's ASTIA.
Mary actually mentions something, a theme that is very important, finding the right crowd. So a lot of times I'll meet with an entrepreneur that really hasn't executed yet and is chasing sort of angel funding. And a lot of times my advice is go back to your friends and family, because there's sort of a life cycle of how you raise capital. Go back to maxing out your credit cards, your friends and family first. Maybe execute a little bit, because when you're asking somebody to write a big check, it's helpful to have some execution behind it, some proof of concept, rather than just an idea. And it's always a difficult conversation. Sometimes the entrepreneurs aren't even committed to the idea full time yet, and that's a timing when you're going to seek the capital is a sort of a delicate and interesting conversation. You sort of don't want to wait till it's too late. It's helpful to have the conversation, but before you go and just kind of think about it as a human, you're asking somebody to write a big check and really take a bet on you and your idea. Oftentimes finding that right crowd is timing it correctly as well.
I agree with not knowing audience. I see a lot of entrepreneurs do that often. They're excited about their concept, and so they want to pitch it to you like they're pitching their customers, and they're missing the point that they're communicating with an investor, and they want to evaluate you as an investment opportunity, not as whatever you're trying to push to the consumer, because they may not be your target market. So understanding the difference between pitching your consumer base versus your investors. And then something that I see with, depending on what type of entrepreneur it is, they get really excited with the types of valuations they see in the market, and they'll open up with a very high price. And I encourage people to get the best deal possible. I am on entrepreneur sides, I get that, but then I'll see the same group 6 to 10 months later, and they're at half the price that they started at, and they said, oh my God, I wish I would have just done my homework better and looked closer at where my business was. And I end up trying to coach people with that early on.
I wonder, what's your thought on valuation? I always, the advice that I give the entrepreneur, especially at the very early stage, is it's a bit of a range, and to conduct a proper valuation. I saw a valuation guy walk in, Sanjay's in the audience. I saw him walk in at the end there. To conduct a proper valuation of a company that's really in concept phase is pretty difficult, and it ends up being more about selecting the right partner. But what you say, I see a lot as well, where a company will go out with a valuation that's either outlandish or they're too firmly committed to it. I wonder,
They
in
end
the
up
audience.
wasting their time.
Yeah.
And it's unfortunate because they're so busy building a company, and I don't like seeing entrepreneurs waste their time that way. I'd much rather see them focus on their business than spending 70% of their time trying to raise capital and realizing they keep getting shot down and no one's telling them why.
Perfect. One of the themes I'm hearing from everybody is, knowing your audience and all the things you want to do to get yourself set up to approach them. Can you guys talk about some specific housekeeping items that people should have in line before approaching investors so that they can just be more prepared? Lou, I don't know if you want to take it.
Yeah, I mean, legal and accounting are big areas. A lot of times the folks I meet with have the legal at least sorted out. They might have an attorney or they have a friend who's an attorney and they've started. The accounting usually gets left behind completely. I mean, I've met entrepreneurs that have had an LLC set up for 3 or 4 years and never filed a tax return, and now they're going out to ask somebody to write a check to them. It's kind of like first impressions. It's like, putting on a clean pair of jeans, or wearing the right suit. If you go to somebody and you're asking them to write a couple $100,000 check and you haven't bothered to file your tax returns, you kind of start off the conversation, not making the right impression. So, it's things like that. Mary mentioned the IP. Depending on the type of business it is, and not an attorney, but so they know enough to be dangerous. Provisionals can be done relatively inexpensively, and that's a sort of sign that to somebody who's going to write a check that the investor kind of has their shirt buttoned up and knows what they're doing, versus going to raise funds without having any of that stuff done.
I would say that coming to the table and coming to the meeting with your plan B and your plan C, generally speaking, if I'm compelled by the story that I've heard and I'm saying no, what I find a lot of the times is no discourages people and they turn around and walk away. And I will sometimes go so far as to coach people and say, hang on, we're not done. I actually think it's a compelling story. Just because I'm saying no, it doesn't mean I don't think this is a viable business, and doesn't mean I might not know somebody in the industry that I can introduce you to. They came to the table without a plan B or a plan C. What happens if they say no? And so what happens if they say no should be the list of people that this person knows, and people that they're going to give you access to. Some of my biggest advocates have been the people who said no, but who, I got on my side by the end of the meeting, and so I see that a lot. Have your plan B and plan C sort of well mapped out before you have the conversation.
When you say plan B or plan C, what do you mean?
I mean, you're going to say no, but I happen to know that you're friends with investor X, Y, and Z. Can you please make an introduction? Or, if you say no, could you introduce me with people that are going to help my business progress that are not necessarily investors, but I need vendor relationships?
So that seems odd. If I go ask you for money and you say, listen, I don't want to invest with you, what would make me think that the person that you'd introduce me to would go to you, well, are you investing in them? And you'd say no. So it seems like we're starting off on the wrong foot there.
Yeah.
I just want to repeat for this side of the room. So the conversation that's going on is about having.
Yeah, the mics.
Oh, the mic's not on? All right.
Yeah.
So the conversation is about having your plan B and plan C ready. And one of the comments is, that seems odd to approach one investor, and if it doesn't go well, ask him who else he knows or for other potential introductions. And that's kind of the dialogue that we're going on.
I'd love to hear the other opinions at the table, but I had a recent conversation where I spelled that out, and I think that having thought through it, one of the things that I try to explain in terms of my reasoning for the no, I'm at a point in my life where it's very, very clear to me that there is this tiny, tiny little narrow area that I have a personal affinity for. Now, there's a much broader spectrum of things that are viable businesses and that I would gladly recommend to a number of people in my community too. But within that spectrum of viable businesses, my personal affinity is so very specific that there are going to be many, many times where I say no to something that is perfectly viable that I'd be happy to recommend.
And I think especially in the angel space, because angels tend to be individuals or groups of individuals that are focused on a segment of a segment of a segment. So that's how you get good at investing. You sort of narrow your focus. So, you may not have found the right audience, but that person might lead you to, 3 people that get you the right audience.
And one of the,
Oh, sorry, go ahead.
sorry. And one of the things is, as an entrepreneur, this is an area where no does not necessarily mean no. And no might mean no, not right now. And so I have some investors where they initially said no, and I thought they had really great connections, which often can be as good as the cash at the time. And so then I just kept at it by involving them in the business and then saying, okay, can you really look, this person's invested. So it's all about leverage. So it's timing, leverage, and really you just have to be persistent. So having a bunch of different plans, know what you're missing on your advisory board, because if you involve somebody, they get excited, they're involved in the business, and then they want to invest. We're currently doing that with somebody who said no at the first meeting, but it was no, not now. I want to work with you for a month and see if I believe in your vision. And so.
What I was going to say was that it's not binary, right? What Nathalie gave as an example was what she focuses on is specific. And so I have an ad tech guy. And so if he meets somebody and says, oh, you're a great entrepreneur, but this isn't what I do, this isn't what I invest in. Or they'll be friends with other investors and say, this is too early for me, but my friend's fund, for instance, they have a better appetite for where you are as a business and what you're asking for. So that's why it's okay for us to refer in the networks, because it's not black or white when it comes to investing for peers in the community.
Thank you. Okay, another question?
Yeah, just to elaborate on that, on his question, when exactly would you go about asking that? Is it, do you wait for the no, or do you make your pitch and kind of see where it's going and then say, and if it's not a right fit, I'd be happy for any networking or advice opportunities?
You always ask. You never leave a meeting without asking. If you start a meeting, because then you're wasting that person's time and you're wasting your time. So that's one thing that women don't do so well, is ask. And it's scary the first time when you just say, are you interested in investing in my company? Or are you interested in investing in Traklight? Everyone now jump up and say yes. No, I'm just kidding. But seriously, it was so scary the first time I said it, and it was over Skype. And then the person said, yes, I'll invest in the company, and I'd love to be on the advisory board too. So I was like, okay. So the first one for me wasn't a no. There's been many no's since, but I've turned some of those around, and some of them you just do have to eventually sort of almost give them. But, yeah. So if you say, you ask right away, if they say no right away, then my initial, I'm like a proverbial two-year-old, it's like, could you tell me why? Is it because there was a woman that I spoke to in Boston. It was like an 8-minute conversation. She said, explain Traklight. I did. She said, that's not in our wheelhouse, but I'd be happy to introduce you to this person. So that's like a simple no. And you know what? As the longer you spend doing this, that's the best no, because it's quick. Nobody's wasting anybody's time. So you want to get to that point really quickly, and then you have to make a judgment call. It's great. Yeah.
So generally you want to wait until, because I know you had mentioned that some people didn't have a plan B or a plan C. And I think as an entrepreneur, you don't want to show yourself as being negative, as in I'm not going to succeed. So I think it's kind of like, how do you, some people would think, put a spin on that? How you go in with that plan B and plan C. Is it that you say, if we receive a no, we do have plans, whether it's personal funding. Is it that you want to say it right away so that people aren't thinking you don't have?
I think you have to gauge the flow, and it really depends on, if you're in a room like this and or if it's a one-to-one meeting or Skype. I think you really have to gauge it, but I think having those questions prepared for when you get the no, why is always a great question, because why helps you pitch better, pivot better, think about why. And then, having just the question of, oh, okay, no for you. Do you know anybody who X, Y, Z fits? But I think going in asking for that, I'm with you. I think you're almost setting up for no.
Yeah.
But you really have to gauge, I think, I learned the probability on the college bar scene, right? If I ask 10 times, eventually you're going to get So I don't know if that's exclusive to guys, but you mentioned like girls have trouble asking. So,
An approach, I mean, I think that those are all fine approaches. An approach that I find really efficient and that I actually appreciate. You're right, sometimes people don't ask, and I get a little frustrated, and before the end of a call, I'm like, what do you need? You know, so I would much rather have somebody start the conversation by saying, here's what I want to cover today. I'm looking for funding. I'm looking for vendor relationships. I'd like to meet other investors. You know, I mean, give me the list of 5 things and we'll go through it. You know, and maybe the first is a yes, maybe it's a no, but I find that really efficient and to the point. And to your point about spinning, I think it's in terms of getting a no, it's less about spin and less about words and more about demeanor and your reaction and making sure that that aspect is positive. Nobody likes to disappoint anybody. Nobody likes to have an uncomfortable no, whether you're giving it or receiving it. But knowing that there's a positive outcome that's coming out of the meeting, regardless, that maybe we covered 3 of the 5 things this person wanted to get out of the meeting. Everybody's satisfied. I hope that helps.
So I got another one over here. Got a couple of them actually. We talked about angel funding. Is there a specific range which you guys think of as angel? And as a follow-up, you guys had also, just to go through the list, had mentioned the idea of an advisory board. If you guys can talk about that also.
I can address the angel investment size. It's generally $25,000 per angel, and then angels tend to vary if the size of investment in which they like to invest per company. So generally it's 25K is what we advise for individuals, and I have people that either do 25 or 250. There's no in between. And some people are consistent at 50. So it just really depends on the person. And then as a group, we could do 300 to 500 easily. Anything beyond that, we've led rounds of over 1 million, 1.5 million. And I'll let Mary or Natalie talk about advisory.
I just wanted to comment on angels. My view of angels is not as much as how much the check is going to be, but the fact that an angel should really just be betting on you or your team if you're co-founders. That's what an angel does. An angel isn't like a VC in that, and I'm not disparaging VCs at all, please. A VC is really, really interested in the product, and they want numbers and they want revenue, and an angel is more like, okay, we believe in you. And I have seen, like we have in our company, from a $10,000 check to a $250,000 check. And I can tell you that there's no rhyme or reason with the amount of due diligence. It's not directly proportional. It's actually almost the opposite, because people are betting on you. As far as an advisory board, it's the most critical part of a startup, in my opinion. There's a couple of things. One is the advisory board you start with on day 1 might be a couple of mentors. It's not the same advisory board you're going to have a few years later, and you shouldn't feel bad about swapping out advisors. And if they're great advisors, they'll put their hand up and tell you that they're too busy or something like that, or you can work it out. Advisors, when you first start, I think they should be volunteer. As you grow and you get revenue, then you should be offering people, stock options or whatever your legal form is. And our advisory board is something that we have regular meetings, but then I have different ways of working with each of the advisors. And my advice is make a list of all the things you're good at, or you think you're good at, and then all the gaps that make a successful business, just try to plug all those gaps with awesome advisors. And you'd be surprised. It's like asking for money. People are flattered. I just had breakfast with a woman this morning. She's like, it's a privilege that you're asking me this. And I'm like, no. It's the other way around. Like, I'm so honored that you're considering this. So it's people are flattered when they get asked. So
I agree that an advisory board should really be your wish list. In the case of Power to Fly, for example, I was a volunteer advisor for a platform play that was really exciting to me, probably the most exciting thing that I'd seen in years. And so I just wanted to support. And next thing you know, I'm CRO. So, for them it was a real bonus in that they started to build advisors that were very much on their wish list, and then, they landed somebody to actually join the executive team as a result. The other piece in terms of investors, what I often think of, I agree, less about numbers in terms of angels and more in terms of the mental framework. I think of recreational investor versus professional investor. And angels are most definitely recreational. So all of the psychology that goes into that in terms of the community aspect of it, and all the things that come with recreational investors. If I think of an investor in Broadway, it is all about having fun. And I think that there's more dimensions to that, to angel investing, than just fun, but I still think that that's
You use the word affinity to a certain space, and you wouldn't hear a venture capitalist speak that way. It's really more of a personal investment, and they are investing in the entrepreneur and maybe a segment of the business that they feel very passionate about. For me, EdTech is something that gets my juices flowing, and I'm kind of living firsthand in some of the clients I serve, and I see my kids and how far behind the school districts are in employing EdTech. So for me, that's what gets me going. And everybody has a certain affinity to a space. So that I agree. It's not necessarily size, because an angel round can be as much as a venture capital round if you get enough of them together. You've probably seen that. You mentioned some check sizes that sound like an A round, but it really is a different type of investment.
I also, yes, there are recreational angels, but there are also professional angels.
Yes.
Just, she said investors. And we work really hard to make our group professional investors. We have a lot of investors apply, and we say no to a lot of them because we want people who are actually taking this seriously and are willing to do the work when evaluating a company. And we've instituted so many processes so that you could feel like you're going through a professional experience instead of just dealing with these investors who travel and are flighty. And even though they might travel a lot, I still hold them accountable so that they can be professional towards the entrepreneur, so you don't feel like your time's being wasted. So there are groups that work very hard to be professional.
See hands flying. I'm going to try and keep up in the right order. Is there one up here?
Yeah, valuation, again, you use that word once. Tell me a little bit about how to value. There's an ongoing debate in my little company about...
Never call your company little.
Our company. Well, you're right. It's not. It's
Exactly.
a platform, so it can't be small. The debate continues to rage. Is it 2 million? Is it 3 million? Is it 5 million? And that drives where you go. So I'm not going to go and talk to an angel if I need $3 million. At least my mind says that, right? I would probably go to a VC. And we're far enough along the platform development to look for that kind. But how do you get your head around what that number is? Somebody say, well, how much do you need? Well, I know what I need. But the question is, what do you value it as? And you said there's a guy named Sanjay here. Maybe that's a discussion for
He's an
Sanjay.
evaluation guy. He'd be a good guy to talk to.
Yeah, because we essentially merged two platforms.
There's
So how do you-
there's the science behind it, so
Right.
that you can put a number on it.
Right.
And then there's picking the right partner and what they're willing to value the company at. Maybe you guys can speak a little bit more about that, because that's the difficulty in it. For me, you can prepare a valuation based on some model of cash flows that you've created that's as good as a dartboard. And,
Right.
And then there's other transactions that are similar in the space that you've seen, but none are exactly alike.
Exactly.
So you can get a range, I think, but to pick a number for a company that is either pre-revenue or only has a little bit of revenue and really hasn't
Right.
executed the way they are, I think it's very difficult to do. I think it's less about the number and more about finding the right partner and the right deal, and it becomes a negotiation. As long as you're in the range, this is the advice that I give, if you're in the range of something that's not preposterous, then you can start the conversation. If you start out with something that's completely outside a reasonable range, generally you won't get to a conversation. So I don't know if you guys can add anything to that. That's sort of my...
But that range could be 30 or 40 or 50%.
Give me
Yeah.
100%.
Yeah.
Don't
Yeah.
do that. I mean,
But don't go with the range, but be in the
your
range.
investors want you to keep working. So if you give up too much, you're not going to be
Right.
motivated enough, and we don't want that.
Right.
I think we have a new advisor, and he's a lawyer, CTO, and they just raised $55 million, and he raised $40 million from Goldman Sachs. He gave me a great piece of advice, because we're raising using a convertible note, doesn't have a cap, there's no valuation. So he was running me through my slides, and he asked me, what are you going to say when they ask about the valuation? So the round we did last time was a priced round. And so I told him what the valuation was, and he just stopped me. He goes, no, you're going to smile, and you're going to tell them you're looking forward to seeing what the market is going to pay for Traklight when you go to raise the bigger price round. Because that is what valuation is, fair market value, on arm's length, right? Back in the back.
Sanjay, over here.
Now we have had a valuation done. We had a professional valuation done, so I have a number in the back of my head. But the idea is, as the person raising the money, and if I'm raising on a convertible note, I don't.
I was gonna say, talk a little more about the structure. I don't know. I've
Yeah, the
seen that a lot.
convertible note, I would be interested to hear that.
The one with the cap and the down, you know, I don't want to get too
Oh,
specific, but
yeah,
just give
I'm
it
not
10,000
Yeah, just
foot.
gonna need a promise to stay on task, and it's gonna be good, if it's okay with you, because after the,
Yeah.
after the session. Does he another question?
Yes.
I don't want to ignore it.
Yeah, I realize there's probably a lot of overlap, but I wanted to get a sense of where the delineation is between angel and VC, and when is a company far enough along that angels are not typically interested any longer?
It's blurring significantly, mainly because the seed rounds are getting a lot larger right now. And the A round definition, I see it's in the $5 to $10 million range for a lot of people, and I still see people doing smaller A rounds only because they raised so many small seed rounds. They were like, we just need to call it an A already. And it's getting silly is the problem. In the $2 to $5 million range, there's a bit of a gap. And so that's why you see these larger rounds with these micro VCs. So that comes into a different network versus a traditional VC. So it really depends on the nature of your business and your capital needs and how many rounds you might need going forward to help determine that. But I'll just let you know between 2 and 5, it's a bit of a blur. And just quickly for evaluation and term sheets and all questions that you find entrepreneurs have, there's a New York Angels Education Meetup group where we have recorded webinars that you can access. So if you go to meetup.com and type in New York Angels, you can go ahead and see those webinars. And when you register, within a day or two, my associate just sent you the link to that.
I have a small follow-up on that. When you want to go ahead and raise money, if you say, I need this much to get me through a year, this much to get me through 2 years, this much to get me to profitability, what should be going through the entrepreneur's head as far as, are you looking to raise money that's going to take you through a specific time period, your milestones, or all the way through so you never need to raise another round?
Don't do that.
Not the latter.
Of course, but you know, there's sometimes is do I go for the 1 to begin with, or the 3, or if you know that a certain amount's going to take you.
You want to raise enough so that you have enough growth in value, so your next round is at a great evaluation. So whatever that milestone is, whether it's a certain number of customers, or a certain amount of revenue, I think it's driven by your milestones and how much you need to get to that milestone. You want to build enough buffer into it as well. But you know, I think we talked about it before. If you raise too much too soon, you've given more away, and then you may not have enough to work for. You sort of have to.
I think a good rule of thumb. I've had some investors say to me, like, we want you to raise enough so you have a year or a year and a half of runway. I just look at it as I'd like to get a certain amount of sleep, and if I don't have enough runway, I'm not going to get sleep because I'm going to be worried about making payroll.
The other thing is it takes you out of the business when you're fundraising. That's something that I think we sort of mentioned a bit.
Yeah.
So every time you do that, it's sort of interruptive, especially when the team is small. So that's something, you know, when you talk about a year and getting enough sleep, that's something that's important as well.
So you mentioned milestones, and I think you alluded to this, but I would just underscore it's milestones specifically tied to a transformative milestone, right? There are many milestones around platform building and various different growth, but I do think it's that this particular milestone is going to be transformative to the company in terms of bringing us into a new bracket on revenue or bringing us into a new market or whatever that sort of transformative thing that will impact the valuation substantively.
The famous inflection point.
Right.
That's what you want.
Excellent. Got another one.
What if that's a difficult thing to evaluate? In other words, if you come up with sort of a really new idea, new technology, and you've been advised that you have several different markets by people in those markets, but then maybe you think to yourself, why don't we do something for all markets for, let's say, a year or two and see which ones pick up? I mean, how much freedom can you assume that you may ask for when going to an angel investor along those lines?
Let me make sure I understand what you asked. You said freedom to test customers? Or help me out?
Markets.
So you haven't found your product market fit.
Well, we've found several product market fits.
Okay.
So
Which one is easiest to get to pay for your service? And has the volume?
I think we're both coming from maybe the same opinion, and not everybody will share this opinion, but I would wait till you choose one before you talk to me.
Yeah, okay.
And how much do you talk about the other ones? So if you sort of say,
Yeah.
listen, here's option A, and this is where we're putting all of our eggs right now, but we see a further market for our product later. But
That's a great fundraising story, but the key is laser focus on one, do it really, really well, show that it works, and then take it to others.
Prove
and
that you can
prove
run
it.
and build a business doing that.
And what?
Prove that you can run and build a business doing that, right? It's proof. Proof that you could do this, proof that you get to the next round, proof to get more funding.
Especially in fundraising, and I've seen entrepreneurs that are sort of all over the place. My experience is that it's a big turnoff to investors. They want to see that you're laser focused on one thing, one market. Its focus is really, really important, and driving some execution in a particular focus point, and then moving on and showing that you can duplicate.
And that's another place where your advisory board really helps, because I've had my advisory board say, okay, it's great that you have like 10 other product ideas, but go back and do this. And you need the person. It's a swirling, it's fun, but it's a swirling.
I just had a
mess.
conversation with an entrepreneur who's tremendous. He's somebody that I worked with in a former life. He started a product company, completely disrupting that area of the market. Doesn't have an ERP system. He wants to build one himself. I laughed at him. I said, your backers have backed you and trust you and have given you a lot of leniency and let you do whatever you want, but they don't want you to build an ERP system. They invest in a product company. Do that and do it really well. There's 1,000 other companies that have built ERP systems. Let's go buy one. So focus is and he's still pushing back on me, but focus is really, really important. And I'm sure he can build a great ERP system, but that's just not what he should be doing at this time.
When it's pre-revenue, what are the angels actually looking at? What should you be demonstrating to them?
So that kind of goes hand in hand with one of the questions I was going to ask everybody to weigh in on. You know, we're talking about, there's a lot of good content here, but when it actually comes to your pitch, I think what you're trying to ask is what are the main points you want to come out of your pitch? What do you want to convey? I don't know if whoever wants to take that one first.
There's, you can take, but there's lots of decks online and there's lots of resources. Probably your group has tons of resources for entrepreneurs when it comes to building a deck, and there's lots of groups that have them. Definitely talking about the market is a big one. The ask is a big one. You mentioned ask first. I've been through a lot of pitch decks, and a lot of times I'll accelerate the ask up front because it's usually you get through, 10 slides and it's hidden in the back, and sometimes if you don't pace it right, you don't even get there. So we say start with it, but kick it to the rest of the group as well.
People always emphasize storytelling, and I know Nathalie has a good point for storytelling, so I'll let her take that. But the thing that gets lost in the noise when people get very excited about their product or passionate about it is that they miss the basic economics of their business. You're dealing with investors. Numbers are the same in every language. Even if they're not used to your industry, they'll still understand value that you're creating and value in what money can be made and growth in markets. So if anything, prove that you're the knowledge expert for the space that you're going after. And that always ties back to things that every investor looks at: market size, team ability to execute, and then if you're pre-revenue, don't have a business model yet, even demonstrating how you're looking at business models you want to test and showing those economics behind that thinking. Because more than anything, we want to know how you think.
I don't know if this is a direct answer to your question, but I started through the center at Barnard at Columbia, I started a summer camp for high school girls teaching them to be entrepreneurs. At the end of it, they actually pitched in front of people like Brian Cohen at New York Angels. And one of the things that I got from the university was a staff of people who are professional pitch coaches, who are professional public speaking experts. I threw all of those away because I was concerned that if the next generation of entrepreneurs pitch the way the current entrepreneurs pitch, I will shoot myself. Instead, we brought Broadway actors and directors. We brought them into the room and had them take over after most of the curriculum was complete. And we had them basically help these students craft a story, a 5-minute story. That was, of course, rooted in the tenets and the really basic, important building blocks that I agree are totally universal and have to be there. But ultimately, is a story to engage the audience. I keep going back to this idea that even if the answer is no, if you've gotten them to understand and support your idea, there's a lot that can potentially come of that relationship. And I think that one of the pieces of feedback actually that I think both Vanessa and Brian provided is that the end result is that we had a bunch of 14 and 15-year-old kids that were pitching at a level that was better than most adults. So I do think that being memorable, making sure that you're not forgetting the humanity of the story you're trying to tell, of course, retaining all of the basic building blocks of the business as well. It's a fine balance, but for me, the rule of thumb is always that the point is simply to continue the conversation, whether that be a second meeting, whether that be referrals, whether that be introductions. The objective is to get them to continue the conversation with you, not necessarily to know every minutia, but to remember you.
So from some of my pitching experience, I hate the pitch. I just don't like it. I find it very rigid. You have this many minutes, and I'm a storyteller, as you notice. So I don't like the fact that sometimes what's going to come into my head is different, and I'm not a rehearsed person and all of that. So I struggle with the traditional pitch. But one of the things, and I agree with everything that you said, particularly know your numbers. Like, absolutely know your numbers. You can't stand up in front of people and ask them to write you a check without someone saying, well, what's the gross margin of Traklight? Well, it's 90%. Like, I have to know that. You have to know your pitch, your 30 seconds. You have to know that for literally the elevator. You could leave here with somebody who's an investor, the one person who identified himself as an investor. We could all be chasing them. Put your hand up again. No, but seriously, you have to be able to articulate your business in 30 seconds. And if you wake up at any point in the day, you have to be able to do that. So that's like the most important thing. And the other thing is, don't be humble. It is not a time to be humble up there when you are trying to convince someone to part with their hard-earned money. You can't stand up there and say, yeah, I have a little company. I used to do that, and I got corrected by somebody. I have a little company, I have a little startup. You have to say, like, I bring this, this, and this to the table, and you have to talk about how exciting it is. But I agree with Vanessa. You have to have a problem, a solution, and the economics on how you're going to make this investor money. That's like the bottom line. Otherwise, you're just wasting everyone's time.
Thank you. I am monitoring our time. We're probably going to have about 5 minutes. So thank you for being so conversational, making my job remarkably easy. There might be a few other questions, but I do want to ask the panelists. If there's one takeaway everybody should walk out of here with from your experience, what would that be? I'm going to call on somebody.
Yeah, I'll go. Because I probably have both ends of the spectrum. I worked in a largely intact most of my adult life, and so I was usually the only woman in the room. And then the last 4 years, I've been in kind of the opposite situation where I've seen men today for the first time. I think that the one piece of advice that I would give that I think applies to everyone, but especially to women, is what we talked about at the beginning of this conversation, which is don't take the no's personally. And learn to have thick enough skin, especially if you're a woman. We get 4.7% of venture capital. That number has not changed. Look at what happened this week. It's not going to change anytime in the near future, although many of us are working to make sure that the dial is moved. You're just going to have to develop really thick skin and get used to hearing no and dusting yourself off and doing it again.
Don't stop building your business. Right? Don't let fundraising take over your life. I understand that it can be time consuming, and that's why you have to maintain control of the situation when you're dealing with different investors that you're communicating with. Those that don't get to know quickly, or those that just seem like they're wanting to learn more about your industry versus about you, right? You have to pinpoint these people and shut it down and just say, look, I'm building my business, and don't lose focus of that because I see people do that, and it's wasteful of your time because you could be creating value throughout the process.
So find an advisor or a group of advisors that you trust, that have experience in your domain, that have been there, done that. Don't let things like housekeeping get in the way of what you're trying to accomplish. You know, things like IP or taxes or bookkeeping. You know, a lot of that has to do with knowing your numbers. If you're not keeping them, it's tough to know them. And it's amazing how many entrepreneurs that I've met with. And look, in the early days, it's not that complicated. It's a checkbook. So it's just somebody accumulating that. You don't have to spend a ton of money to do that, but it should be done. And generally, as the entrepreneur, you're not the best person to do that. Your time is much more well spent doing higher value tasks. But find somebody who does that and engage them in a way that it doesn't cost you a fortune, and it's not going to get in the way of you know, raising capital or finding a strategic alliance or a number of other things that it could come in the way of. I mean, I've worked with some early stage companies that end up being acquired much sooner than they ever thought they would be, and those types of housekeeping things can kill a deal. So you know, don't let those things, don't let those easy menial things get in the way of killing the deal.
So I just have a plug for our freemium model. I'm serious. We have a free business risk assessment for all the entrepreneurs out there. You go to Traklight, no C, Trak, that's a whole nother story, traklight.com. We have a free business risk assessment that gets at the foundational issues of your business, including, we did add in, we talked to lots of CPAs last year, we did add in questions around books and records and that type of great stuff. My one point is persistence. You have to be persistent. And to your point about being pre-revenue or what do you do or how do you balance all this, every morning I get up and I go, what can I do to move the needle forward with my fundraising? Can't take the Excel spreadsheet out of the accountant. I have a huge list. I go through it. What do I have to do today? Okay, that's done. Now the next most important thing, investors want revenue. So what can I do to get revenue today? Okay, can't get any revenue today. How can I get users? I can get all of you to go sign up for Traklight and use it for free. So that's what I do every day. And if you don't love doing that every day, then don't try to raise capital, because that's what you have to do. You have to be a little bit crazy.
Excellent. I know we're running out of time. We have time for maybe one or two broad questions, and I know we'll have some spillover conversation. See one again first. Go.
How should you pick a lead investor? So if you have a couple folks who are interested in leading the round versus potentially setting terms yourself and saying, hey, here's the terms we're raising under and going out with that. Is there criteria that you would recommend in picking a lead?
I've got nothing on that.
Do you already, so it's two things, right? The first stage is depending on the terms that are already being agreed to. In my position, I usually see companies that are already pitching their terms and saying that this is where we are, this is what we have commitments at. So they just need somebody to lead and take that legal responsibility. So it would be strategic value at that point. Who has access to whatever it is that your business needs the most of. If they have a background in the entertainment industry and can reach out to different people who are in that space for video games or music, it's just a random industry, right? Or someone who came from a media company and used to run multiple magazines at Time Inc. and you're in digital media, it's things like that. Or is it someone out in Iowa that is gonna, this is actually based on something, that is saying yes first, but they don't have, you don't know enough about their network to see if it's a value for you. So just kind of have them pitch you back, right? You should interview them.
Yeah, you know, the smart money is always better than the money even at a higher valuation that isn't smart. And you know, picking the right partner, especially in the early times, I think is paramount to kind of taking that small investment and creating something that you're either going to exit or you know, you're going to build more value. So I'd rather take a lower valuation early and have the opportunity to build a greater value with somebody than take the money in Iowa that's not going to get me anywhere. It's going to run out in a year, and then what do I have?
Very short follow-up on the kind of Iowa example. Or
I actually ended up being liars. That's another year. Go ahead.
Sorry.
Angels? Phone angels?
Oh, something
Very
like
quick
that, yeah.
follow-up. So, like in my example, or in my situation, it's local investors versus folks out in California. I really like and feel a good vibe, and they're in the industry in California. And then I have folks who are very interested in local, and I got advisors who say, you know, go with someone close to you. But you know, my gut's telling me, well, maybe I want to be out in California. I don't want to move into California. That's not an option family-wise, but that's kind of my decision.
Never say never.
I mean, I just helped launch an accelerator in Boulder called Merge Lane, and the people who were organizing the accelerator decided to take on the lead investment role on a couple of the companies. And I think that in the case of, the ones that I'm aware of, they're not local, right? And so these companies have come in from other geographies, but they are willing and committed and being very, very explicit that they will open a number of other doors. And that really ultimately has been the decision-making process for a lot of these companies in terms of saying yes or saying no. It has to do, I'm not suggesting that geography is not important. Of course, those relationships can be very important, but this particular accelerator has brought in people from all over the country to build what is really a compelling program, and so their ability to open a lot of additional doors has a lot of credibility and a lot of weight, and so a number of the companies have decided to let them lead, and it's really largely because of that. Geography is ideal. Market connection maybe isn't ideal, but as far as being a platform and being able to open a bunch of additional doors, they seem to really hit the mark on that one, and maybe that's something to think about for your California people.
Thank you.
Thank you. I'm going to hit one last question, and I'm going to respect everybody's time.
Sorry. Say you had your narrative, you had your numbers nailed, and you have a product that you feel that the market doesn't know what they always wanted. How do you then get in front of the angel networks and make your pitch?
You're talking blue ocean, sort of you're creating a new category. You have to educate your consumer. Is that what you're talking about?
No, I'm just asking in general, what is the appropriate process of getting in front of angel networks and angels in general?
Go to their websites and see what their process looks like, see if you have any connections via your LinkedIn network. I highly encourage all of my investors to go to events in New York, different pitch events, where they get to meet with entrepreneurs, because we're all about hands-on experience for the investors. And half my referrals for every screening at the beginning of the month, half my companies pitching at screening, which is tomorrow for me, where I have usually 14 to 16 companies pitch, half are from the angels, from the referrals in the network. And then the other half apply to us and they get rated and reviewed. But every angel group is different. And any VC fund that you ask, how do you get your deals? They'll say referrals. It's always network.
And I would encourage you to find somebody on your LinkedIn, somebody connected to somebody for every group. Like, don't go to a group cold. I just think it's better to find somebody who's going to make that intro, so at least they know who you are.
Just really quick on that, are there any LinkedIn groups that are active? Because some people's LinkedIn aren't necessarily as active.
Well, what I mean is you go on and you figure out who's in the angel group, then you go and you stalk them on LinkedIn.
Yeah, even coming to events, sometimes an event like this gets you to somebody that gets you to somebody that has a connection to an angel. So it's being out and about. It's not very different from being an accountant or a lawyer and trying to do business development. The more you're out, the closer you get to where you want to be.
But with LinkedIn, I'm serious. Like, you pay the $53.10 now, whatever the state tax is, a month. It allows you to send emails, and you just send it to somebody. Pay attention to the rules around sending them. I have good friends now that I met because they wrote something cool, and I found them on LinkedIn, and I wrote them. But please don't be that person who writes somebody, they link in with you, and then you try to sell them something. Like, that's not the idea. But it's a very powerful tool.
And the network should include other entrepreneurs. I think that one of the things that Vanessa was talking about in terms of professionalizing angel investing involves what I think is a pain point for a lot of entrepreneurs that I've heard, especially lately, is that you go to these groups, you find that many of the angel investors actually haven't invested in, say, the last year and a half. So not only are they not actively investing, but to make matters worse, maybe they're offering professional services, and what you actually end up doing is getting pitched. So those are the kinds of things where you will save yourself a lot of time and energy if the people that you're networking with are also include fellow entrepreneurs who are telling you, I've been there, I tried this, I got pitched, don't go there. Be really efficient with your time, and a lot of the times that information comes from your peers in terms of other entrepreneurs.
Excellent answers. We are 8 minutes over the time I promised myself we'd wrap up the formal part. I know how it feel about me if I were sitting on the other side. So I thank you all for the interaction. Thank the panel for Enjoy.
I
Thank
don't
you.
like to have